Good morning also from my side. I'd like to first of all thank you for being interested in the Baltics. I think we've had an interesting story, and perhaps for the next 3 slides, before I go into that, I would offer a short sort of summary of how I see the past 25 in the Baltics and how that has sort of emerged and developed. So let me take you back to 1991. New reality, re-independence for all the Baltic countries. We had to reinvent our legal system that's based now on German law. We have to go through the process of privatization. New companies were started up. As I said, new reality. We only started to see some real estate development action in what we call modern real estate development at the end of the 90s. And that was mainly launched by the new banks that were the Estonian banks and Latvian, Lithuanian banks at that moment that were starting up. So one of the first core CBD office buildings, for example, in Tallinn, was built in 1997. So we were quite proud of the fast economic development that we had at that moment, even though it was largely about low-cost manufacturing. And but then what happened was 1998, 1999, and Russian crisis. And we figured out that it's not really a good idea to export goods 50% to one country. So that was a lesson learned. We continued with a couple of years of very low GDP growth, where the economies again had to regroup themselves, learn from the lesson, and beginning of 2000s was when the actual diversification of export markets started. What we saw in the beginning of 2000s for when it comes to real estate is that whatever you bought in 2001 and sold in 2006 or 7, you made 4 or 5 times the money. And that was largely to do with the fact that we joined Eurozone, European Union at that moment, and NATO in 2004. What we also saw in the 2000s was something called debt. We didn't really grasp the implications of it, but due to the large competition between the banks, the debt of the private debt and the public debt, well, the public debt not so much, but the private debt skyrocketed. And it was in 2009 when we figured out that too much debt is also not good. So in 2009, when we had the financial crisis, and the crisis was quite strong also, especially in the Baltics, because we decided to go through not the devaluation of the currencies, but rather the internal devaluation of the economies, and that meant that we had very strong austerity measures for the couple of years in 2009 and 10. Now, back to real estate. What you saw in the 2000s, what we call the first commercial real estate cycle of the Baltics, we saw new shopping centers developing. We saw new office buildings coming to market, but the supply there was lower than the demand. What that meant was that rental prices increased very rapidly. And there was a lot of speculative development, and a lot of that got hurt then in 2009. So when we started this fund in 2010 with a group of Finnish and Swedish, mainly Swedish investors, and some Baltic investors, the situation was different. Let's say the air was blown out of the economies of the system. and we started to see that where the second real estate cycle that started then is a much sustainable one, much more sustainable one, yes. We started to see offshoring, or nearshoring actually, well that's the right term, is that you have the international companies opening up their back offices. And we started to see a strong transition from the low-cost sort of manufacturing economic environment to a more value-added, service-based economic environment. And as you probably know, there, in addition to the manufacturing companies, we have now most of the back offices of the Nordic banks in the Baltics, and those are increasing the employment there, and as well companies such as Western Union, Barclays, all of their IT centers or what we call the back office services are located either in Tallinn, Riga, or Vilnius. And that's a trend which I think we like, because when you have the workforce spending time on thinking with their heads and rather than their hands, I think that sort of develops a strong platform of additional value growth in the future. One example is a company called TransferWise, which was started by an ex-auditor and a IT back-end developer, and that company now is worth more than €1 billion, and it was just launched a few years ago. So I think that's definitely the trend that we're seeing. So what we have done with, as Andrew mentioned a little bit, we have developed a property portfolio of 5 properties. We had 5 properties at the beginning of this year. And together with the investors, we decided that, investors were saying, why are we selling it? And that's also a new reality in the Baltics, is that when, last decade, last cycle, you had to buy properties and sell properties to make money. Then this cycle, you buy properties, you hold properties, and you make money. The key difference as well, just to note, is when the yields peaked in 2007 at around 6.5% and 7%, the cost of debt back then was 4-5%. So the spread there was very, very thin. Today, our portfolio is yielding 7%, and the cost of debt is less than 2%. So that's where you get the spread. So what we did was that we listed the fund, and that structure is something very specific to Estonia, but we like it. We know it inside out, and we know it's more beneficial to the investors and to this type of real estate investments than a company. So we listed the fund on Tallinn Stock Exchange and raised some additional equity, bought 2 more properties. And just yesterday, we declared a first quarterly dividend of 2%. That is just to say that the portfolio is turning around cash very well. What we are planning next is to become the biggest property fund in the Baltics, and that's together with the listing dual listing in Stockholm, because Stockholm for us is the New York of this northern region when it comes to stock markets and investor base. So that's generally what this graph or this table is showing. Long-term goal is, of course, to have sustainable growth in the future and grow our fund to be a €1 billion fund. A lot of people have asked me, is that too big? How many assets do you actually have in the Baltics? Well, surprise, surprise. I think again, during the past 15 years, and this is happening continuously. We have new buildings coming up, new buildings being built with strong tenants, and the tenants are coming mainly from the Nordics. So as Andrew was saying a little bit, investors are really buying the same type of risk, but just in a different geographical location. You have Nordic tenants, Nordic banks, top-notch construction quality. So does that make sense? And to a lot of investors, that has made sense. Just a few words about the portfolio that we have built up, and we have what we have also seen in the past 15 years is that we really make money in office and retail in the Baltics. We've not invested into logistics, hotels, or manufacturing as such, and we will not. We like office buildings, again, with strong tenants. We like shopping centers located either in the CBD region or in highly densely populated neighborhoods. And I think two of the gems, Coca-Cola Plaza and the Europa Shopping Center, are really in the heart of the city, as central as you can get. And some of the neighborhood supermarkets why we really like neighborhood supermarkets is that we saw how resilient they were during the crisis years. Everybody still needed to buy food. We keep our leverage low at 50%, and we like to diversify our financing as well. We have 4 banks, different Nordic banks financing the portfolio. Then, just a few words about the structure. It's similar, but not exactly the same as a company. We have, of course, the investors' general meeting that sets in stone the fund rules, which is our Bible, and it sets really a very specific strategy, what we can do and what we cannot do. The fund rules is something that the management company, which is the Estonian fund management company, Northern Horizon Capital AS, has to abide by. We have also a very prominent supervisory board. I think we're all, you know, I've always have had the belief that more heads are better than one. So I think you know, the team that is actually overseeing the strategy is exceptionally professional. Below here we have the management board, myself and Ausra. She's not here, but she's our risk manager and head of administration. And perhaps this is the moment where I would like to introduce Algis Vaitikunas, one of the co-founders of the management company, Northern Horizon Capital, back in 2001, and the fund manager of other real estate funds that we have had in the Baltics.